Welcome back to our deep dive into the history of silver prices in the United States. Today we're not just talking silver, we're also exploring the shifting foundations of the US dollar, from its days backed by gold, to oil, and now into uncertain territory. Plus, we'll give you a glimpse into what the future might hold, especially with the rise of BRICS nations challenging the global financial system. Let's start 200 years ago in the early 1800s. Back then, silver was valued at about $1.30 per ounce. The US dollar was backed by gold and silver, thanks to the Coinage Act of 1792, which established a bimetallic standard. You could exchange your dollars for a fixed amount of precious metal. The average home cost around $2,000, which would be about 1,540 ounces of silver. An average car didn't exist yet, but a horse and carriage would set you back around 100 ounces. A loaf of bread, just a fraction of an ounce, about 0.05 ounces. Silver was a stable store of value, and it played a crucial role in everyday transactions. Fast forward to the 1920s, just before the Great Depression. Silver was around $1 per ounce. The dollar was still tied to gold, but the cracks were beginning to show. An average home cost around $6,000, equating to 6,000 ounces of silver. A new car was about $500 or 500 ounces, and a loaf of bread would still cost around 0.05 ounces. But as the Great Depression hit in 1929, silver prices plummeted to as low as 25 cents per ounce by 1932. President Herbert Hoover was in office, and the economic turmoil caused a deflationary spiral that crushed silver prices. The gold standard remained, but it was clear that the financial system was under immense pressure. Now let's move to the 1940s. World War II was ending, and the economy was beginning to recover. By 1946, silver had risen to about 70 cents per ounce. An average home now cost about $8,000, or roughly 11,430 ounces of silver. A new car was about $1,300, which would be around 1,860 ounces. A loaf of bread? Still around 0.05 ounces. The Bretton Woods Agreement of 1944 had just established the US dollar as the world's reserve currency, backed by gold. President Harry S. Truman was in charge, and the post-war economic boom helped stabilize silver prices. The US dollar was king, but the reliance on gold was a double-edged sword. Jump ahead to the 1970s, and we see a dramatic shift. In 1971, President Richard Nixon took the United States off the gold standard, effectively ending the dollar's direct convertibility into gold. This led to a period of inflation and economic uncertainty. Silver prices skyrocketed to over $48 per ounce in 1980, largely due to the infamous Hunt brothers trying to corner the silver market. An average home in 1970 cost around $23,000, which would be about 480 ounces at the 1980 silver peak. A new car was around $3,500, or roughly 73 ounces of silver, and a loaf of bread would be about 0.02 ounces. The dollar was now backed by the promise of the United States government, and later by the Petrodollar system, where global oil trade was conducted in US dollars. This move helped stabilize the dollar but also tied it closely to global oil prices. In the late 1990s, silver was back down to around $5 per ounce. An average home was now around $120,000, or about 24,000 ounces of silver. A new car would cost about $20,000, equating to 4,000 ounces, and a loaf of bread was about 0.02 ounces of silver. The economy was booming under President Bill Clinton, and confidence in the dollar was high, bolstered by the petrodollar system. Silver, once again, took a back seat as a safe investment. But for those who believed in silver's long-term value, this was a time to buy. Today, in 2024, silver is hovering around $24 per ounce. The average home costs around $400,000, or about 16,670 ounces of silver. A new car will set you back $40,000, or about 1,670 ounces. And a loaf of bread? Still around 0.02 ounces. The petrodollar system is weakening, and with the rise of BRICS nations, Brazil, Russia, India, China, and South Africa, there's talk of a new global reserve currency. The dollar, no longer backed by gold or oil, faces an uncertain future. If faith in fiat currency continues to erode, silver's price could surge as people seek a tangible store of value. Let's recap some of the major historical events that caused silver prices to soar or crash. The Great Depression, from 1929 to 1939, saw silver drop dramatically as deflation gripped the economy. Then, during the post-World War II recovery between 1945 and 1950, silver prices began to stabilize as the economy grew. The end of the gold standard in 1971 led to inflation and a spike in silver prices. In 1980, the Hunt brothers' attempt to corner the silver market caused prices to spike to $48 per ounce before crashing. And finally, during the late 1990s economic boom, silver hit lows as confidence in the dollar surged. So, what could happen to silver if the US dollar collapses and we move towards a central bank digital currency? In such a scenario, silver could become an even more critical asset. If people lose faith in fiat currency, silver's price could skyrocket as it becomes a go-to store of value. We could potentially see prices far exceeding those of the Hunt brothers era, especially if the BRICS nations successfully challenge the dollar's dominance. Silver has always been a reflection of the times, rising and falling with the fortunes of the economy and the shifting foundations of the US dollar. From the days of the gold standard to the era of petrodollars, and now into a future that may see the rise of central bank digital currencies and new global currencies, silver remains a crucial part of our financial landscape. Whether you're investing or just curious, understanding silver's history and its relationship with the dollar can give you insights into its future. Thanks for watching, and don't forget to like, subscribe, and hit that notification bell for more insights on silver, the economy, and other fascinating financial topics.